Hello, ladies and gentlemen. Good morning and compliments of the seasons. So happy Easter to my brothers and sisters out there. Let's confirm that we are good to go this morning. So if you can see my screen and can hear my voice clearly, please type in hi in the comment section so that we can get this started. So I would like to see some feedbacks in the comment section, please. If you can see my screen and you can hear my voice, type in hi. All right, so let's see what we have here. Okay, 1780, good morning. Thank you very much. Christian 1975, good morning to you. Hey Carrie, happy Easter to you too. Good morning and glad to have you around. So I would rather take this as a positive feedback that we are good to go this morning. On this note, I am welcoming you to another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'll be your host as we go on embark on a trading journey, evaluating the financial market using technical parameters to identify trading opportunities ahead of the New York session. This is the first trading day of the week, the first day of the month, the first day of the week rather. And as usual, what we are going to be doing today is to identify random pairs that we want to be monitoring for the week. And this is the most appropriate time for you if you do have any instrument that you want us to monitor for this week to drop it in the comment section, as if you have it in the comment section today, I shall incorporate it into our plans for this week. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad to have you around. You can signify yourself in the comment section if you are joining us for the first time, so let me see you. And what we simply do here is to gather here ahead of the New York session to spot trading opportunities on the pairs and instrument that we have been monitoring since the beginning of the week. So that is what we simply do here. And we do this 11 a.m. UTC on a daily basis. So that is what we do already. That's what we do here simply. And initially it might look a little bit overwhelming at first, but I assure you that with time you get to understand how this works, and you will be able to use the information you have gathered here to make your own individual decision when you're about to take your own trade. So once again, you are welcome on board, and on that note, let's dive in and start the business for the week. I can see Kairu Karim. Hey Karim, good morning to you. Glad to have you around. It's been a while since I saw you around. Trust you are doing well. 646, hello, good morning to you. Alright, so as usual, the first thing we are going to be doing here is to keep tabs with the fundamentals. And before we kickstart the session, we want to run through the economic calendar to see if we do have any macroeconomic event to look forward to today. And another thing I would like to state here is that trading activities are started a little bit on the slower pace this morning, and it's as a result of the holidays, the Easter Monday that is going on. And I'm of the opinion that we might likely be seeing a slow start to the week, and we don't want to get caught up in any compulsive move to make any sudden to open a position, as we need to really be very careful to see that the market structure mature for us to before joining any potential opportunity today. And let's see, we shall watch the market and see how to position ourselves, as I hope that as we gradually move into the New York session, we might begin to see some traction in that regard. So based on the current pairs that I have for this week, looking at what we have here, we can see that the Bank of Japan's governor nominee, whoever is going to be having a speech in about 6 minutes from now. So everyone will be looking forward to that, to see is going to be doing some comments on the policy situation in the Japanese economy, which everyone will be looking forward to see what he's saying and what the health condition of the Japanese economy is. So besides that one, there is no other macroeconomic event to look forward to today. So with that being said, we shall be diving right into the current market structure to decipher what is really going on. So the first commodity we are going to be looking at today, as usual, is the US oil. And on the US oil chart here, you will, if you have been with me in the last couple of months now, you will see that the structure we have on the higher time frame still remains the same. And the dominant factor around this area is the consolidation phase between the $82 level and the $70 area, which has been very prominent in the last 4 to 5 months in this market. And not until the month of March last month that we saw some significant move that broke down that support line at the $70 level, and this was as a result of the banking crisis that happened during the course of that month. But one thing we noticed here is that as soon as price got into that $65 level, we saw the bullish momentum beginning to come in. Price action climbed above the $70 area, and prior to last week's trading session, we saw this bullish gap which opened, and this was the immediate reaction to the OPEC Plus members' decision to cut oil production by 1.66 million barrels per day in total, which dovetails to approximately 3.7% of the total global oil demand, which is on the high side. And there was this expectation that oil prices might likely skyrocket to the upside based on this, though we had the bullish gap at the beginning of last week. But one thing we noticed here was that throughout the course of last week's trading session, we saw our price action remained within a consolidation phase, which further emphasizes the indecision at that point in time. So we have a situation right now where price, though is above the $80 level, but we can see that price continue to oscillate right around that area. And what we are going to be doing today is to dissect the market structure around that area to see if we can identify the potential direction that price action might likely be going for this week. And before we go into the lower time frame, I would like to state here that the $80 mark will be serving as our key level for this week. And what this simply means is that if price action continues to trade above that $80 mark, we shall continue to look out for more opportunities to buy, with the hopes that the $82 level will be broken to the upside. However, if price action drops below the $80 level, with sudden pressure resuming below the structure on our lower time frame, then we will have no choice than to look forward to price action going to the downside, which might likely be the retracement of that previous impulsive move that brought us to this point. So these are things that we shall be looking at when we scale down to a much more lower time frame. Now moving on, I will be moving into the 4 hours time frame, where I was able to identify a simple setup that I think we can use to guide our trading activity for this week. Now, if I zoom into the 4 hours time frame here, what I did here was to take into consideration the price action activity since the mid-month of March. And one thing I did here was to, obviously you can see that price action has been finding higher highs in this market, and one thing I did here was to connect a series of higher highs, which gave this resultant trend line that you can see on your screen right now. And following prior to last week's trading session, we saw that bullish gap, which I emphasized on the daily time frame, which had about 49 pips bullish gaps, breaking out of that trend line to the upside. And throughout the course of last week's trading session, we saw our price action has been trading between the $81.20 level and the $79 area to emphasize that indecision in this market. And you all know what we look out for whenever we have this kind of simple setup. We have no other choice than to remain patient for price action to either break down the support line of the channel to give us a selling opportunity, or a breakout of the channel to the upside for buying opportunity. So this is where our center of focus is going to be for this week, and coupled with that bullish trend line that I identified earlier, you will see that if price action ever breaks down the $79.50 level, then we might be in for a sell move, and at the same time price action would have broken down that bullish trend line, which has been supporting that higher highs that we noticed earlier. And if price action breaks out of the $81.20 level, that will also give us a further confirmation that this whole pattern that we have here will turn out to be a trend continuation pattern. So with that being said here, and remember what I told you on the daily time frame, that the $80 mark is going to be our yardstick for trading activity for this week. So as long as price remain above the structure, we shall continue to look out for more opportunities to buy. And so as we head into the New York session today, what I want us to be doing right now is to see to observe how participants in this market has been reacting to the current structure since the beginning of this week. And obviously price has been trading above the $80 level, which is our key level. And what we want to do is to see how price action is reacting to that trend line. Are there signs that buyers are gradually gaining momentum to respect that bullish trend line with the intent of breaking out of that resistant line at the $81.20 level? Or are we having a situation where selling pressure is going to lead into the breakdown of that trend line to incite a sell-off in this market? So that is what we are going to be looking at, and in order to do this, we need to scale down to the 1 hour time frame, where we begin to see how participants in this market has been reacting to this current structure. Now look at what we have here since the beginning of the week. You can see the week started with a bullish gap, as you can see here. And so we had a start at around the $81 level, where we have been witnessing selling pressure since the beginning of this week. And in fact, this is the highest point price action has ever been for this week. Then we have the support line for this week at the $80.45 level, giving us a clue into how price action is currently trapped within this range. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistant line at the $81 level, while the resumption of buy pressure above the structure will respect the bullish trend line, and at the same time give us a clue into the strength of the buyers, where the further breakout retest of that $81.20 level will be welcoming more buy position in this market. So with these expectations here, we should be having a buy stop order just right above the $81 level, so that we can be part of that move to the upside. And personally, I am of the opinion that price action might likely continue to the upside, considering the strength of the buyers around that $80.45 level during the early hours of today. As you can see here, price action has been trying to break down both that trend line and that support line since the beginning of this week. But what we have been seeing here, considering the nature of the week of this candle, you can see that we've been witnessing sharp rejection, which further emphasizes the strength of the buyers at this point. So I'm of the opinion that price action has a high tendency of breaking out of that $81 level rather, and a further breakout of the $81.20 level will be welcoming more opportunity to add more position to our existing trade. So let's look forward to these opportunities here on the US oil. Now, in as much as we are looking out for buying pressure, buying opportunities in this market, it is very important, and if you have been with me, you will know that we always try to ensure that we keep our options open, so that whenever the opposite happens, we are also on standby to catch that move. The financial market is a very, very fluid market, And for us to make profits in this market, we need to be as fluid and flexible as possible so that we can be able to catch any trading opportunity here. So with that view in mind, we should also take into consideration the potentials of sellers at this particular juncture. So looking at the current structure here, what do you think will happen that will make us feel comfortable of selling? What I simply mean is that what are we going to be seeing on this chart that will happen that will inform us that sellers are gradually coming in? Well, for me at this particular point in time, and considering the consolidation phase we have been witnessing within the $81 level and that $80.45 since the beginning of the week, I'm of the opinion that a breakdown retest of that support line at the $80.45 level will be welcoming a sell position in that regard. And you all know, if a breakout of the $80.45 level happens, then it will mean that price action has broken down that trend line, which will happen to be the first time price action will be breaking down that trend line in the last couple of weeks. So let's see how price action will play out this week. I'm holding on to a bullish bias here at the breakout of the $81 level, but if at any point in time during the New York session today price action breaks down the support line, then we'll have no choice than to look out for selling opportunity. So that is my view here on the US oil for today. Screenshot my screen, map out the structures on your chart, and let's wait for price action to play out in whatever direction it wants to go, and we are going to be ready to be part of that move. If you have any questions, feel free to drop your enquiries in the comment section. So in that regard, I will be moving on to the next pair. And the next option we shall be looking at this morning, as usual, is going to be the US Tech. So right here on the US Tech, what is our view? The first thing we are going to be doing is to scale up into the daily time frame so that we can have an holistic view of what is really going on in this market, so that we can actually take a well-informed decision on our lower time frame. So right here on the daily time frame of the US Tech, well, it is quite obvious that if you look at this from a long-term perspective, you will see how price action has been bearish in this market. And in fact, throughout the course of last year's trading session, we saw how price action had continued to find lower highs in this market. And when we connected the series of lower highs, we have this bearish trend line figured out. However, something interesting happened during the course of last year. In fact, during the second half of last year, despite the fact that we have been witnessing this lower highs here, one thing you will notice is that price action found it very difficult to find a lower low to confirm that momentum. And look at what has happened to see how the $10,500 level has been a strong buying niche, hereby negating all attempt by the sellers to continue to the downside. And this was further confirmed during the beginning of this year, as we saw price action resume at the 10,500 breaking out structures, leading to the final breakout of that bearish trend line, which has been supporting the bearish momentum since the beginning of last year. And with the situation we have here, you can see that we have an ascending channel after connecting the series of higher highs and higher lows in this market to further emphasize the strength of the buyers since the beginning of this year. And in fact, to further confirm the strength of the buyers here, we saw the breakout of that $12,800 level a couple of weeks ago. This was a level that has been a strong selling niche for over 6 months in this market. Look at what happened here in the month of August of last year. We saw the breakdown of that structure. We saw a retest of structure here in the month of September. And if we fast forward into the month of February of this year, we saw how that same level was a strong selling niche, negating all attempt by the buyers to break out of that structure. The same thing also happened here during the third week of the month of March, before the final breakout happened at the beginning of this month. And with the current structure we have here, let me zoom in a little bit so that we can see things more clearly. So with the current structure we have here, it's appears that price action has broken out of that structure, retested the structure a couple of times, and we are beginning to see some buy pressure resume around this area. So now the question now is, for this week, are we going to be seeing a trend continuation to the upside, where the appearance of buy pressure at the retest of the 12,800 zone could likely incite a move that will see price action move into that $13,800 level, which happens to be our long-term TP target on the US tech, a level which also shares a confluence with a structure here in the month of August of last year. That is one scenario we are going to be looking forward to. So if that is going to be happening, we definitely want to be seeing some trend continuation pattern around this area on our lower time frame. Then another thing that could happen here is this old structure that is gradually evolving right now could turn out to be a reversal pattern. It could come in the form of a double top structure. So we have the highest point at the 13,220 level here. Price action dropped into the structure. So if price action finds it difficult to break the previous high to the upside, then we might likely see a situation where price will transition into a reversal pattern, breaking down the 12,800 level with selling pressure below the structure to incite a downtrend in this market. So these are the things we are going to be looking at today. So these are the possibilities we want to look at, and in order to be able to decipher what is really going on here, we will need to scale down to a much more lower time frame to see what is happening around that $13,000 mark. But before we go into a much more lower time frame like the 1 hour time frame, let's look at the 4 hours time frame, where I was able to identify a simple setup which I think we can use to guide our trading activity for the week. So right now we are on the 4 hours time frame. And what I was able to do here on the 4 hours time frame was to take into consideration the trading activity in this market since the second week of last month. And if we look at this closely, you will see that it has been bullish on the US tech in the last 6 to 7 weeks in this market. And to further buttress the strength of the buyers here, we have connected the series of higher lows in this market, giving us that bullish trend line that you can see on your screen right now. So you can see how price action has consistently respected that bullish trend line. However, the last impulsive move that came out of the bullish trend line was this one, which led into price action testing the $13,200 level. So look at what happened here during the course of last week's trading session. We saw how the 13,200 level continued to be a strong selling niche in this market, as every attempt by the buyers to break out of that structure has been met with strong resistance from the sellers. So if we compare what we saw on the daily time frame, you know we were looking forward to a trend continuation to the upside. But if we look at what is happening here on the 4 hours time frame, you will begin to see that there is a chance that sellers might likely take over this market. And if I zoom out of the structure so that we can see things from an holistic point of view, you would agree with me that if we consider this impulsive move that started during the mid-month of March, a retracement phase at this point might likely be long overdue, as majority who took advantage of price at a very low level here will at one point in time want to be doing some profit-taking activity, which will definitely reflect on the chart as a retracement move into a structure before another wave of bullish momentum will happen. So now the question right now is that the sell pressure that began around the $13,200 level last week's trading session, will it be a strong momentum that will finally break down that 12,900 level to incite that move to the downside? That is a very big question here. And when we look at the structure, look at what has been happening on this chart in the last couple of weeks, you can see how price action has been within this channel between the 13,200 and the 12,900 area, where anything could actually happen. We could have the situation transition into a trend continuation pattern where a breakout of the 13,200 will be welcoming a buy position, or price action could break down that support line at the 12,900 to join a bearish move to the downside. Now, if we look at the both perspective here, you will see that between the current price, if we look at the distance between the current price and the resistance line here, we have about 170 pips, and if we look at it to the downside here, we have about 150 pips thereabout. So are we going to wait for price action to get into to break out of the resistance line or break down of the support line for us to sell or buy this trade? Well, I don't think so. I think there is a way we could actually figure out a way to join that potential move even before the breakout or breakdown of that channel happens, so that we can maximize the profit on this chart. So in order to do this, what we needed to do is to understand what really happened last week. And if we look at what happened last week, this was the whole of last week's trading session here. I was able to identify a key level here at the $13,060 level. And why is that so? Well, if I zoom out and look at this clearly, you will see how the $13,060 level has been a major determinant of price action throughout the course of last week. Initially, it was a buy zone, as we saw our buyers gathered here to push price to the upside, but the momentum failed as we saw selling pressure resume, which led to the final breakdown of that 13,060. So following the breakdown of that 13,060, what did we see afterwards? We continued to see selling pressure resume around that area. So what this simply gave us is a technical expectation here, where the breakdown of this key structure at a $13,060 level, we expect a retracement into structure where the appearance of selling pressure around this area, it has a high chance of inciting another wave of bearish momentum to the downside, where a further breakdown of the 12,900 will be welcoming more opportunities to add to our existing trade. So these are the views that we have here, and to further buttress the strength of the sellers at this point, we connected the series of lower highs in this market, which gave us this trend line here. So this trend line here will serve as a yardstick for trading activity for this week, coupled with that key level at the 13,060. So what this simply means is that if price action continues to trade below both of the structure, that is a $13,060 level and that bearish trend line, we shall feel comfortable in our sell position. But if at any point in time price breaks out of that trend line to the upside, climbing above that bullish trend line, then we might be in for that trend continuation to the upside. So what we are going to be doing now is to scale down to the 1 hour time frame, where we want to see how participants in this market has been reacting to that trend line and that $13,060 level, which has a major confluence there. Let's see how price has been reacting to that structure to decide what our next line of action will be. Now, when we scale down to the 1 hour time frame, we begin to see things more clearly. So let me zoom in and let's reset our chart. So this is what we have here. So look at how the week started on the US tech. So we can see how price has been caught within a channel where the resistance line, which happens to be the highest point price action has ever been for this week, is at a 13,090. So we saw a little breakout of that key level there, and then we saw price action did a test of the 13,090, and what we saw after the test was a sharp rejection of that structure, leading into an engulfing candle that broke down that key level we identified earlier at the 13,060. So right now we have price back into the 13,000 level. We saw buy pressure resume, and this for me might likely be a retracement of that impulsive move that started the week. So we might likely see price action retrace either into the trend line or the $13,060 level, where the appearance of selling pressure around the structure in our lower time frame, that is, buyers find it difficult to break above the $13,060 level, will be welcoming an opportunity to sell the US tech. So if we cite a reversal pattern like a double top structure around that area on our lower time frame, then we shall get ready to sell the US tech, where a further breakdown of that support line at a $13,030 level will be welcoming more opportunity to add more sell position to our existing trade. Then a further breakdown of the 12,090 will welcome more opportunities in that regard. So this is what we are going to be looking forward to sell the US tech for today. However, in as much as we are looking out for selling opportunities in this market, we cannot ignore the potentials of the buyers as well. And for me to buy the US tech today, I would rather see price action take out the sell positions at the $13,090 level. Remember, this is the highest point price action has ever been for this week. So I want to see price action take out that position, and at the same time, if it takes out that position, it would have climbed above that bullish trend line. And if we are fortunate enough, the appearance of buy pressure around this area will welcome more position to our existing trade. And as soon as price gets into the $13,200 level, we want to move our stop loss to secure the position, as it depends on how price action reacts to this level. That will determine if we are going to be adding more buy position to our existing trade or getting ready to join another wave of bearish momentum to the downside. So let's see how price action plays out today, and tomorrow we shall be giving an update in that regard. So what I'm simply saying here is I'm holding on to a bearish bias. First of all, the reason why I'm doing that is, one, we have a bearish trend line. We can see price has been bearish for quite some time now. The week has started on the bearish note as we saw a sharp rejection of the 13,090, and currently we saw this impulsive move as a third one, and I'm of the opinion that we are going through a retracement where at any point in time, anywhere around this area, we might start seeing reversal patterns on our lower time frame to join that decline to the downside. So I'm holding on to a bearish bias, but if the opposite happens, that is price action breaks out of that structure, then we would have no choice than to join a bullish momentum. So let's see how price action plays out. You can screenshot my screen so that you can be able to use it as a reference point when you're about to make your individual decision on the US tech. If you have any questions, let me know in the comment section below. All right, I think I can see some couple of inquiries here. I can see Adric Kick asking about the BTC. Okay, so let's see if we could add that one to our plans for today. Then I can see Chankra Sentis. How are you doing today? Good morning. 224, good morning to you. 756, good morning. Vicent, good morning to you as well. 808, good morning. And I can see Smoochie. Good morning to you, Smoochie. Are you new with us? All right, let me know in the comment section if you are new with us, Smoochie. Okay, so in the absence of no questions, I want us to move on to the next pair. So the next pair we shall be looking at this morning is the GBPUSD. And on the GBPUSD, we want to scale up into the daily time frame. So let's have an holistic view of what is really going on in this market, and then we shall come back to our lower time frame to make a decision for today. So right now, if you look at the daily time frame, you can see that there is no much difference from what the structure we have been using to monitor price action in the last couple of weeks. Since October last year, price action has been bullish, and this can be confirmed with the bullish trend line that you can see on your screen after we connected the series of higher lows in this market. However, something interesting has happened in this market for over 5 to 6 months now, as we saw how price action had continued to range within the 1.24500 level and the 1.1800 level, giving us a clue that there is an indecision in this market, and the 1.245 level has been a strong selling niche in this market for quite a while now, negating every attempt by the buyers to break out of that structure. But if we zoom into the current structure, that is what has been happening in this on this chart in the last couple of weeks, you will see that price action gained some momentum to the upside, leading to the breakout of that resistant line for the first time in the last 6 months. So we saw the breakout of the resistant line at the 1.245 last week's trading session, breaking out that level with an engulfing candle as well. But immediately after the breakout of that structure, we begin to see price action drop back, even going to as far as below the 1.245. Now the question at this point is the breakout that we saw here a valid breakout? Is it a true breakout or a false breakout? So let's quickly look at the possible scenarios around this breakout of the 1.245. First of all, on the higher time frame, where we will get to understand things better when we scale down to the lower time frame. So one of the potentials of this candle that broke out of that resistant line is, one, it could turn out to be a true breakout where price action retraces to do a retest of structure, the resumption of buy pressure around or above the 1.245 on our lower time frame could incite a wave to the upside. That is one scenario. Then the other scenario is if this breakout could turn out to be a false breakout where price will drop below the 1.245, selling pressure resumes below the structure on our lower time frame. That is, price action finds it difficult, buyers find it difficult to break back above the 1.245, selling pressure continues, and that will be a signal that we want to be joining that sell momentum to the downside. So these are the things that are very possible for this week, but in order to be able to be more precise in such a way that we can position ourselves to catch any potential trading opportunity here, we need to see how participants in this market has been reacting to the 1.24500 level since the beginning of the week. So are we seeing buy pressure around this area, or are we seeing sudden pressure around this area to give us a clue of the intent of price action? So, but before we go into that 1 hour time frame where we are going to be seeing things clearly, I have a view on the 4 hours time frame which I would like to share with you, and this will also give us a better perspective into what is really going on, hence we can be able to position ourselves appropriately. Now look at the 4 hours time frame here. It is quite obvious that since the first week of the month of March, price action has been bullish on this chart, and the bullish trend line that connected a series of higher lows here is evident in that regard. However, our center of focus is not the trend line at this point, but at the structure that has happened in this market since the beginning of this month. Now, the last time price action respected that bullish trend line was here at the beginning of this month, where we saw this engulfing bullish candle spring out of the structure, leading to this impulsive move into the 1.25200 level. And after price action tested that structure, what did we see here? We saw selling pressure, which to me at this point, based on the bullish momentum that we have in this market, is probably going to be a retracement of that previous impulse leg that we identified earlier. As you can see, throughout the later part of last week, we begin to see selling pressure, and as soon as price got into that bullish trend line, what did we see? We started seeing buy pressure resume around that area. So now the question at this point is, will this trend line still be strong enough to hold that bullish momentum, as we already been seeing buy pressure around that trend line since the later part of last week's trading session? And if that is going to be the case, we might likely see price continue to the upside, beginning the second wave of that impulsive move that started a couple of weeks ago. Then the other thing about the structure is that it is a very, very sensitive area whenever we have price action around a trend line. It could be the bullish trend line, it could be a bearish trend line. As long as a consolidation phase is observed around the trend line, it is very important for us to be mindful and see how price action is connecting or reacting to that trend line to determine what will happen. Because anything could actually happen from the structure. We could see price action break down the trend line to which will have been the first time price action will be breaking down that structure in the last 3 weeks. We are selling pressure below this level will incite another wave, a wave of bearish momentum to the downside. So it is very important for us to understand how participants in this market has been reacting to the structure. And to further guide our trading activity for this week, I was able to identify a key level which is currently sitting at the 1.24200 level. And if you look at how this level has been in the past, you can see how it has been a major determinant of price action. Look at what happened here on the last trading day of last month. We saw this level was serving as a strong selling niche in this market, as you can see here. Then look at what happened here during the first day of this month. We saw another selling niche here before the breakout of the structure happened. So you can see how the 1.2420 level has been a major determinant of price action. And since the breakout of this level happened, you all know from a technical standpoint, whenever we have a breakout of a key structure like this, we expect that one point in time price is likely going to come back to do a retest of that structure in anticipation of another wave of bullish momentum. And that is exactly what has been happening so far here in the last couple of days now. We can see price has come back to retest structure. We saw some retest of structure. We are seeing retest of structure again during the early hours of the week. And coupled with the bearish trend line we have here, a breakout of this trend line will now give us a confirmation that buyers are still very strong in this market. So if a breakout of this trend line happened, coupled with the buy pressure we have been noticing around that trend line, we might be in for another wave of bullish momentum. But in as much as we are looking forward to this bullish momentum here, like I always say, we want to ensure that we keep tabs with the opposite scenario. So in as much as expecting buy momentum around this area, we should also take into consideration what happens if price action breaks down the trend line. So if price action breaks down the trend line and we start seeing selling pressure below the structure, we will have no choice than to join that bearish move. So that is why we have the 1.242 level to guide us for this week. So if price action stays above the 1.242, we feel comfortable in our buy position. And if price action breaks down the 1.242 followed by selling pressure below that structure, we will have no choice than to look out for selling opportunities. So with the information we have gathered here, we want to scale down to the lower time frame so that we can see how participants in this market has been reacting to that key level that we just identified now. So scaling down into the 1 hour time frame, we begin to see things more clearly. And what did I see here on the 1 hour time frame? This was exactly what I was able to spot on the 1 hour time frame. Now look at what happened here. The week started on the bearish note as we saw selling pressure around the 1.24350 level, which happens to be our resistance line for this week, as this is the highest point price action has been this week. And since price action got to that level, we have been witnessing selling pressure. Now, as soon as price got into the 1.24 level, which also shares a beautiful confluence with that bullish trend line that we identified on the higher time frame, we begin to see buy pressure resume at that structure. And what this simply means is that buyers are still very, very strong in this market. And if we take into consideration this bearish trend line after we connected the series of lower highs in this market, a breakout of that structure definitely will be welcoming an opportunity to buy. So coupled with the key level at the 1.242, we shall be using this trend line also to guide our trading activity for this week. So I want to do some readjustment on this trend, on this one. So we have the lower highs here. So here we go. So we can see the situation here. So one thing I'm going to be looking forward to this week to buy the GBPUSD is to see price action break out of the 1.24350 level and break out of that trend line as well. Then I want to look out for buying pressure above the structure. Then we could join that trend continuation to the upside, where a further breakout of the 1.245 will be welcoming more opportunity to add more position to our existing trade. So this is what we shall be looking forward to. So we are looking out for buying opportunity just right above the 1.24350 level for today. So let's see how this plays out during the New York session. then we look forward to adding more opportunities at the breakout of the 1.2450 level. Now, looking at the selling perspective here, that is, if price action does not do that and instead continues to find lower highs, then a breakdown of the 1.240 level will be triggering a sell position in that regard, with a stop loss sitting at somewhere around the 1.24350, and that will be dovetailing to about 30 to 35 pips stop loss there, as we're still likely going to see a retracement into structure to happen. We are selling pressure again around this area would also give us more opportunity to add more position to our existing trade. So these are my views here on the GBPUSD. If you have questions and you need further clarifications, feel free to drop your enquiries in the comment section. So that is that on the GBPUSD for today. And the next option that will be instrument I will be looking at is going to be let's see, the XAUUSD. So we are going to be going into the daily time frame right now. So hold on a second, please. All right. So what do we have here on the XAUUSD chart? And if you have been with me for the last couple of weeks on this, on the XAUUSD, you will observe that the structure we identify still remains the same, as we're still going to be using this to guide our trading activity for the week. And obviously what we see here on the daily time frame is quite obvious that price action has been bullish. And to further emphasize the strength of the buyers in this market, we can see that's ascending channel here after we connected the series of higher lows in this market, as you can see here. So this is the higher lows, and sorry, this is the higher highs rather. We have the higher highs, and then we have the higher lows here. And in the last couple of weeks now, we can see our price action has been trading just right around that resistant line. And if we look at this from a technical standpoint, that is, if price action is going to be respecting that ascending channel, we might likely see a retracement back into structure before another wave of bullish momentum will happen. But we'll be going to that in a moment. But I would like to share some important structures here, so I will be zooming into the current structure. Now, a couple of weeks ago, we saw, I think about 3 or 4 weeks ago, we saw how price action hits the highest point it has ever been this month. This year had a $2,000 MAC. We saw selling pressure. We saw a little consolidation phase happen before we finally witnessed the breakout of that $2,000 MAC during the course of last week's trading session, where price action hit its highest point this year had a $2,032 level. Now, with the situation we have here, the next question we want to be asking is the breakout of the $2,000 level last week. Is this breakout going to be a true breakout or a false breakout? Now, the only way we can know if it's a true breakout is when we see price action come back to retest the structure and we start seeing buy pressure resume above this level. Then we could confirm that this is a true breakout. But if price action drops below the $2,000 mark, selling pressure below the structure, inability of buyers to break above the $2,000 level the second time, then we might be seeing this as the beginning of a retracement. And obviously, if you look at the structure here, you would agree with me that a retracement phase seems long overdue in this market in anticipation of another wave of bullish momentum. Now, there's one thing I would like to state here, which I already said last week, but for the sake of those who are not part of our live session last week, I said there is something about the psychology of price action finding a new high. So whenever price action finds a new high like this, there is a high chance that we might be seeing a choppy situation in this market in such a way that price action could go through a retracement phase, a consolidation phase around that area, because it takes some time to get acclimatized to this kind of structure around this area. And if you look at what happened also when price action tested $2,000 mark for the first time this year, we saw a situation where selling pressure resumed. We saw this choppy situation, a consolidation phase around this area before we now saw the breakout of the structure. And it is very likely that we are going to see the same thing after price action hits a new high at the 2032. So we might likely see a choppy situation happen around this area as well before that trend continuation to the upside will happen. So in order to have a better perspective into what is going on here, we would want to scale down to a much more lower time frame to see what is happening. And as a result of this, what I did here was to scale down to the 4 hours time frame, where I was able to identify a simple setup that we can use to guide our trading activity for this week. And what we did here was to acknowledge the fact that price action has been bullish in this market, and this is evident after connecting the series of higher lows and giving us that bullish trend line that you can see here. But the most important structure here is that $2,000 MAC, which was a strong resistance line before, being the fact that it was the highest point prior to the breakout that happened last week. And look at how this level has been a major determinant of price action. Look at this happened last week. We saw, a couple of 3 weeks ago, we saw how this level was a strong selling niche before the breakout of the structure happened last week. Then we saw price action hit its highest point at the 2032, and as soon as price tested that level, we saw that move to the downside. It's out of fear. A lot of people will sell. Profit-taking activities happen, so we saw the sell momentum, and later on this early hours of today, we saw the breakdown of that $2,000 MAC. Now the question is, remember this level has been a strong selling niche in the past. We have a breakdown of the $2,000 MAC now. The question is, will this turn out to be another opportunity to sell this market? That is one question. Or will the $2,000 MAC resume another buy pressure to inside the second wave of that bullish momentum? So these are what we are going to be looking at today. And in order to do this, we want to scale down to the lower time frame to see how participants in this market has been reacting to that $2,000 MAC. But before we scale down to the lower time frame, I want us to acknowledge the bearish momentum since last week. And if we do that, we connect the series of lower highs, we have this bearish trend line figured out. So this trend line here will be serving as a yardstick for trading activity for this week. And what this simply means is that as long as price remain below the trend line, we shall be looking out for selling opportunities in this market. So if we continue to see selling pressure, we will have no choice below the $2,000 MAC to sell the XAUUSD. However, if price action breaks out of that $2,000 MAC, break out of that trend line, then we will be in for a buy position. So all this will get a little bit clearer when we scale down to the lower time frame to see how participant has been reacting to that $2,000 MAC. I can see your comments, Savasa. I'm going to be treating the BTCUSD after this one, okay? So remain patient, please. All right, so here we are on the 1 hour time frame, and what I was able to see here on the 1 hour time frame is how price action started the week on a bearish note. And what we saw here was price started at around the $2,008 MAC. We saw the breakdown of the $2,000 level, giving us a signal that's a significant breakdown of a key structure, which from a technical standpoint, we expect that price is likely going to come back to retest the structure in anticipation of another wave of bearish momentum to the downside. And another thing that will support the bearish momentum is this trend line too as well. So what we are going to be doing here, as you can see, price action is currently trading around the $2,000 MAC. We might likely see a consolidation phase where price action transition into a reversal pattern around that trend line and a $2,000 MAC to incite another wave of bearish momentum to the downside, where a further breakdown of the 1,989 will be welcoming additional sell position in this market. So let's keep this in mind while we hold on to the bearish bias in this market. However, if price action breaks out of that resistant line, which happens to be the first time price will break out of that structure this week, price action would have broken out of that bearish trend line, which will signal that the trend line may no longer be strong enough to hold that bearish momentum. And as soon as we see this kind of situation, we might be in to buy the XAUUSD, where a further retest of structure will give us confirmations to add more position to our existing trade. So you will see how the key level at the $2,000 MAC and the trend line here will serve as a yardstick for our trading activity today. And coupled with that is that structure here between the 2008 and the 1989. So let's be on standby to be part of any of these opportunities as we continue to monitor price action. You might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. Now moving on, Savasa. I think Savasa and who else asked for the BTCUSD. Let me see. Okay, Savasa and Adrikik. I hope you guys are still around so we can trade the BTCUSD. Please let me know in the comment section. And alright, so here we are on the BTCUSD chart, and we actually analyzed this sometime last week's trading session. I think on Tuesday or Wednesday we did the BTCUSD, and we were able to identify a simple setup. Price action has been quite bullish since the last quarter of last year, and our center of focus will be around the recent impulse leg that began in the month of March. And if we take that into consideration, we saw this impulsive move to the upside, and we saw that as soon as price tested at 29,400, we have seen a consolidation phase between the structure. So here we are. The situation we have here is more or less of an indecisive phase, as participants are not sure if the price will continue to the upside, or we might be in for a retracement of that impulse leg. Now, like I always tell you, when price action finds a new high, it is always peculiar that we see a consolidation phase, a choppy situation around that area, as price action still needs some time to acclimatize to the zone, and this might likely lead to profit-taking activities that will probably send price action spiral to the downside in the form of a retracement into structure in anticipation of the second wave of that impulsive move. So these are things that we are going to be focusing on the lower time frame. Then another thing about this kind of structure is the fact that it could turn out to be a trend continuation pattern, where a breakout of the 29,400 level will be welcoming more opportunities to buy the BTCUSD. So in order to be able to participate in the trading of the BTCUSD in recent time, we will need to scale down to a much more lower time frame to see how price action has been playing out within this channel, especially in the last couple of weeks. Now, if we scale down to a 1 hour time frame, so this is what you will be able to see on the 1 hour time frame. Remember that we had this channel figured out on Wednesday last week. We saw this channel where price action was trading within the 27,850, which happened to be the support line for this channel. So that was the demand zone. So if I extend this out a little bit, and then we had the resistant line of the at the 28,000 MAC, which is a strong psychological level. And I told us all last week that the only way we are going to be buying the GBPUSD is for price action to break out of the $28,000 MAC. Hence, we should be having a buy stop order above that structure. And if a breakdown of the 27,850 happens, then we want to be selling. Now, the former is what happened, as we saw the breakout of the $28,000 MAC. And for those who are taking advantage of that opportunity, well done to you for being on standby, as if you still have your buy positions running, you will be with about 280 pips in profit at this point in time. And if you still have your buy position running, I would suggest that you want to be moving your stop loss to secure your position, as there is a high chance that sellers could come in. As you can see, the highest point in the last couple of weeks in this market is this area at the 28,000, and as you can see, price is finding it difficult to find a new high at this area. So what we are going to be doing is to dissect this current structure to see if we are going to be seeing a reversal pattern here or a trend continuation pattern. So if we bring out our line chart, we begin to see things more clearly here. So we have the situation. So what I will be doing is to first of all acknowledge the support line here, which falls at around the 28,250 level. So let's identify that area first of all. So we have the 28,250 level. Then we're also going to be identifying the resistant line, which falls at around the 28,500, I guess. A very strong psychological level, that is. Place at the top right hand side. So bring back our candle chart, and here we go. So there are two things that could happen from the structure following this impulsive move. We could see a reversal pattern come in, probably in the form of a double top structure, where price action finds it difficult to break the new high, break the previous high. Then we might be seeing drop below structure to join a bearish move, probably into the structure to retest it before another wave of bullish momentum, or probably into somewhere around here before another wave of bullish momentum. So that is one scenario we are going to be looking at on this one today. However, if price action continues to climb to the upside, then we shall be looking forward to a breakout retest of the 28,500 level to buy the BTCUSD for today. So this is what we shall be looking at on the BTCUSD for today. So it's a very simple setup. So let's use this 28,500 and the 28,250 level as our yardstick for trading activity for today. So if a breakout of the 28,250 happens, we scale down to our lower time frame, look for a retest of structure, then you could join the decline to the downside, but ensure you are moving your stop loss accordingly to secure your current position, as this is probably a retracement. This will probably be a retracement phase where at the beginning the appearance of buy pressure at any point is likely going to incite another wave of bullish momentum. And if a breakout of the 28,500 happens, then we could see that price would have taken out the sell positions here at the 28,500 to welcome an opportunity to buy. So at this point, you want to remain patient. And for those who took advantage of this position at the breakout of the 28,000 mark, you want to ensure that you move your stop loss to somewhere right below the 28,250. Secure the current position and wait out for price action to play out, to give some room for price action to breathe, with the hopes that price action will continue to the upside. So these are my view on the BTC USD. I hope I made myself clear. And if you have any questions, feel free to drop your enquiries in the comment section. And is on this note, I want to call it a day here on the Extreme Speed Live. I hope you had a wonderful moment, and I'm very sure you are well equipped to be able to take advantage of any potential trading opportunity today, as we were able to simulate all the possible move that could happen during the New York session today. So on this note, I want to wish you best of luck today. And one more thing I would like to state here is that today is a public holiday, and the tendency of getting caught up with the compulsiveness to trade is very high today, because the market might likely be very, very slow because of the fact that there will be not much liquidity in the market, as most organizations are on public holiday today, observing the holiday. And let's just remain patient. Let's wait for the market to mature significantly in our favor before we want to be opening a position for today. So on this note, I wish you all best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we get ourselves prepared for the new week. Sorry, for the New York session tomorrow, rather. Do have a wonderful evening, everyone. Bye-bye.